Traders, Cousin Vinny coming to you from theclosingprint.com, August 23rd, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved a bit higher, with the exception of small caps, IWM, the New York Stock Exchange, the Nikkei, and the Hang Seng. That said, the FANG stocks all moved higher last week, with Tesla gaining over 24%. Followed by Facebook, Apple, and Nvidia with stellar gains to end the week. The bond stock ratio, HYG junk, the Dow Composite, the S&P 500, and the XII are all bullish. We do have a few more bearish indicators this week, with some of the indices like the S&P Equal Weight Index already pulling back to its 21-day moving average to end the week. Thinking that most of this is due to options expiration for the month of August, with Tick showing they were selling into OPEX. NIMO and NAMO cycles are cycling a bit lower, showing a peak, and breadth deteriorated somewhat going into the end of the week, Wednesday, Thursday, and Friday. The US dollar is forming a base. It is showing some RSI improvement. US dollar yen is in a range. Bonds look more bullish going into the week, and the 10-year yield is trying to base at the current level. Gold is in a range. On the daily time frame, pulled back somewhat below the 21-day, and the monthly still in a bullish pattern. Copper did look a little bit better last week, which is good for the home building, construction related names. And West Texas crude continues its grind. Off of the lows 18 weeks ago, it's up over 550%, grinding higher atop a 12-week pennant. While the heat map is neutral to fading going into this week, a little bit more yellow and orange showing up. International markets pretty much the same, with South Korea, Japan, and China showing weakness. We'll look at some IBD 50 names, along with some MarketSmith Growth 250, top volume percent gainers in green, and the blue dot scan in cyan. We'll also look at some of these Dow Industrials, looking for follow-through going into the last week of August. With that in mind, we have Bulkowski with 5 of 5 green. His CPI signal is bearish since August the 18th at 28%. That's bearish with 47 bearish patterns, 58 bullish patterns, and 312 patterns waiting for breakout. Bottom line, we're bearish short-term to neutral. We're in day trade mode, short-term swings, with VIX moving lower into OPEX. SPY and the S&P 500 still have resistance overhead around 3,400 or 340 for the SPY, and support around 3275 for the S&P 500. The spiders did manage to close at all-time highs again on Friday. This is a 60-minute time frame. A move above this area, obviously there's lack of supply. Having not traded up there before, there's a possibility we could pull back, of course. If we do move back into this zone, the major support is down here around 326 to 328. Still, looking at the daily, we do have the 9 and 21 day below price, so until we see a close below the 9 EMA, we're not even in a caution scenario. A close below the 21 day would be needed to start to consider more selling. While RSI remains above 50, MACD has turned back down a little bit. We did see a little bit above average volume on Friday. While the same can be said for the Nasdaq 100, closing at all-time highs, finishing the week up more than 70% from the March lows. All of this is happening, of course, with the number of bulls outnumbering the bears in this American Association of Individual Investors bull-bear ratio. We were nearing the 2009 lows before turning to end the month. We still have a week to go, so there is a possibility that this turns back up. Each valley and each reversal related to a rally in the market. So there is still a possibility of FOMO, or the fear of missing out crowd, pushing markets a bit higher, even while small caps did pull back to the 21-day. Now this is giving a refresh to the small caps. There's a possibility we could bounce off of the 21-day. We did see buyers come in at the end of the week on Friday, pushing prices back up a little bit. We'd like to see a follow through and a move back above the 9 EMA to start. That would be a risk on signal. Otherwise, we could lose the 21-day. If that were the case, then look for a retest of this breakout level and then potentially the 50-period moving average as we transition into the last week of August into September. If we look at a broader measure of market participation by analyzing the S&P 1500, the S&P 500 big caps, the S&P 400 mid caps, and the S&P 600 small caps, as we have over the last few weeks, we're still on a buy signal. We are green and above the red line. Histogram did bounce on Friday, and we're just in a range consolidating the recent gains from the previous breakouts, just below the February highs for the S&P 1500. Therefore, we need to see breadth improve. This advanced decline percent for these 1500 stocks, the S&P 500 in the top panel, mid caps and small caps in the lower panel, we can see that breadth has deteriorated when it was improving going into the last couple of weeks. To end last week, we did pull back. So we want to see a bounce this week and for the New York Stock Exchange advanced decline to move higher as well, which did see fewer new highs than new lows last week. Our moving average has rolled over on the daily time frame, and we barely had a blip above the zero line to end the week. Of course, it was options expiration for the month of August, so we really won't understand exactly what institutions are doing until we can read their open interest positions in the S&P 500, the spiders, and the Qs to start the week going into September options series and into the fall. For now, the New York Stock Exchange 2,900 stocks, more or less, showing the advanced decline is drifting a bit lower, so we have seen a series of higher highs and higher lows over the last few months. We'd like to see this turn into a higher low, and for the New York Stock Exchange and the breadth to improve this week, along with gamma and open interest, which currently shows that open interest overhead at around 3,400 is where most of the options have congregated overhead. So that is resistance for now. We'll have to see how this plays out into the September monthly options series. So stay tuned and make sure you check out the Gamma channel in the trading room for updated information on a daily basis. For now, most of our indicators are neutral to more bearish than they were in the previous 2 weeks, even while VIX continues to move lower, which is telling you that volatility should be contained within about 1%, while VIX remains in a downtrend. Here is the S&P 500 on the weekly time frame. In the upper panel, we're producing green and blue elder sticks, no red sticks, while the bond stock ratio between the 10-year UST and the S&P 500, this is telling you to favor equities over bonds when this is dropping. Looks like it's starting to turn a bit, so there's a possibility of a little mean reversion, as we saw last week. As bonds on the longer end of the curve started to bounce, we had a big bearish candle 2 weeks ago. Last week we bounced. We're still in a uptrend with higher lows, yet to get back above this 172 zone. Seems to be some resistance. RSI is above 50. So apparently there is some hedging going on with the short end of the curve in a sideways range. Since the March lows, we've continued to push sideways, whereas IEF, the 7-10 year, so it does appear that there is some hedging going on, but nothing like the rally we saw in February going into the March highs. Once again, if junk bonds and high yield corporate debt can manage a higher high this week, we do have higher lows. We're above the 65 period. We're also above this very large volume by price band, acting as support. So we're looking for these two to continue forging a path higher. That would be bullish for equities as a risk-on indicator, in addition to IWM, which we already talked about. So with everyone focused on a double top on the S&P 500 potential, overlooking the Nasdaq trading at all-time highs and above the February highs, we'll also look for the US dollar to move higher this week out of this base that it's been creating, with RSI starting to drift higher, MACD above its signal line, and stochastic pointing to further follow through as a suggestion going into this week. And if it does, we most likely will see further pressure on precious metals producing lower highs below the moving averages. In this case, gold is moving a bit lower. We saw buyers stepping up on Friday. So we'll have to see how this scenario plays out. RSI is still above 50. There is a potential for us as this higher low prints out. If the dollar does move higher, this should move lower. And if the dollar continues to base, there's a possibility that gold might get some traction and move a bit higher going into this week. So we'll have to see how the gold US dollar situation plays out and the safety trade going into the last week of August. That said, copper as a commodity continues to give us more of a bullish look going into the election at the end of the year. Copper moving above the area of 52-week highs where it broke above, consolidated for the last 5 weeks, 6 weeks. We broke out, came back and tested that area. So we're watching this volume by price support zone just below. If copper can move higher, that would mean the monthly time frame is rallying as well. We've talked about this repeatedly over the last few months. In 2009, this reversed and moved higher, forward-looking economic indicator, a good 4 or 5 months before the current secular bull market took off in 2009. We also saw another bullish trend and leg higher in 2016 after the election, and starting to see that again going into November and the fall months with regard to copper, which should point to a more bullish scenario for construction related names, home builders, home improvement, and construction products related suppliers in the short term. And finally, we'd like to see crude oil continue higher as well. For the last 12 weeks in this pennant, moving higher. Over the last 18 weeks, it's up over 550% from the lows back in the early part of the year into the last few weeks as we consolidate above this $42 a barrel mark, going into the months of the year where heating becomes an issue. This has a positive correlation to the market, so if we move higher, that would be bullish for equities. Conversely, if we get rejected and roll over, that would be bearish for equities. Sectors show signs that they need improvement, still seeing more yellows and oranges in all the S&P spider sectors and subsectors, in addition to what we saw in the international markets with weakness in China, Japan, and Korea. We'll look for improvement this week as we start the September options series. We also need to be mindful that many of the sectors look very strong, like transports, technology, consumer staples, moving above and remaining above the 21-day moving averages. We also saw healthcare hanging tough last week, along with consumer discretionary. While weakness persists in energy, financials, and some in materials, we could see a bounce at the 21-day. Utilities also pulled back to the 50-day moving average last week. So the majority of sectors do look supporting of a move higher or consolidation in the short term, but it doesn't point to a sell-off or a move lower of large magnitude as XLY XLP ratio continues to push higher. Looks nothing like February or back in 2018 before that 20% drawdown. So as long as this is moving higher, we can be assured that institutions are positioned to the long side and not defensively like they were back in 2018 or in February of this year. So here are the IBD 50 for the week, with a quick reminder that the IBD 50 index has a year-to-date gain of 25.7% versus a similar gain from the Nasdaq 100, 25.8%. Nasdaq has done its catching up in August, posting a 5.1% gain in seasonally one of the weakest months of the year. So that's one of the reasons why we pay attention to the IBD 50 and focus almost entirely on that during the week, as these stocks show stellar fundamentals as well as technicals, helping them stand apart from a large majority of stocks that people talk about on social media during every week. Talk about on social media during the weeks. One of the reasons why we pay attention to the IBD 50, in addition to fundamentals and technicals, as these companies have shown to outperform their peers. So with this in mind, we're looking for Activision to continue higher. RSI is above 50. We're moving above this volume by price zone. That will act as support if we move higher in a bullish trend above the 9 and 21 day moving average. Had a nice day on Thursday. Friday, a little bit of selling going into OPEX, but buyers stepped up at the end of the day. MACD's turning, and stochastics is at 50. Adobe also looking for a breakout and a follow-through. This nice gain that we saw since the March lows consolidated during the month of June into July and August. Looking for a breakout in the short term. RSI is above 50. Advanced Micro is also consolidating a bullish 9 and 21 day below price action with RSI above 50 in an area of no overhead supply. Looking for a follow through this week as a potential day trade and a swing if we can manage to make it through the highs of last week. As volume begins to pick up and stochastics turns higher, we're looking for MACD as a function of price to turn up as well. Akamai also showing a potential sideways range. Currently inside of that range, looking for a move back up to the recent highs. RSI is above 50. Volume increasing, MACD crossing, and stochastics pointing to and suggesting higher prices in the short term. Alibaba, all of the option volume we discussed in the trading room on Wednesday, Thursday, and Friday gives you the net result on Friday. A nice breakout, above average volume, MACD crossing, stochastics rising. Alibaba is probably going to break out this week to 52-week highs and all-time highs thereafter. Amazon's also bullish. Consolidation, rally. Consolidation, we're looking for a rally and a follow-through. Most likely, we'll see a stock split, much like Apple announced recently. Autodesk, software, construction-related, engineering, economy, looks for a breakout of this particular consolidation. Nice rally from the March lows, consolidated for the last 3 months. Looking for a breakout in the short term as RSI remains above 50. MACD cross and stochastic, though a little bit overbought, could take a couple of days, but any breakout would most likely lead to a follow-through into the seasonally stronger months of the year. Bristol Myers looking for Merck, Johnson & Johnson, Pfizer all bounced this week. Pulling back to the 21 day, I like this setup. Volume by price support most likely will hold this level. Look for a bullish day on Monday. A follow-through on Tuesday would be a safer entry. If you decide to enter on Monday, I would scale in. We'll be looking for potential in these pharmaceutical names this week. Cadence Design Systems continues this bullish trend. RSI is above 50. Since moving above 50 back in April, the stock has been in this bullish trend. Watch RSI. This tells you what to expect in the short term for CD&S. Chegg watching for a bounce, consolidating for the last week and a half, 2 weeks, looking for RSI to turn back up, volume by price support below, as well as the 50-day. It's possible we could test that level. Watching stochastic and MACD, these two could lead to this oversold condition and a bounce. We just need to pay attention for the breakout and the resumption of trend as this stock continues to stay near and dear institutions going into this school year. D.R. Horton, as we discussed previously with copper moving higher, look for home builders to also reflect that bullish trend. RSI muscle, volume coming in, that's institutions. Watch for follow through this week. Dollar General looking for a bounce and a follow through this week as well. On the back of a great earnings report from Target, looking for Walmart to push higher as well, with Dollar Tree reporting this week, I believe, on Thursday, as well as Dollar General before the open. HCNP, biotech, pharmaceuticals, all of them looking good and strong. Remember XLV, healthcare, improving, looking for a follow through on HZNP. Bullish trend, RSI above 50, and volume showing institutions have been active. Innovative Industrial Properties continues this bullish breakout and follow through, following the 9 and 21 day. Hasn't tested the 21 day since back here in the last couple of weeks of July, then broke out, looking for continuation of the current trend. Kroger also looking for this pullback to the 90 MA to continue in a bullish trend, looking for buyers to step up Monday or Tuesday. We'll look for that confirmation. If you're still swinging it or interested in a potential trade, this one has pulled back, giving you a better entry. Just need to see Monday and Tuesday bullish action for potential entry. If AMD, Intel, Nvidia, and a few other chip stocks manage to move higher this week, we'll watch for LRCX to hold near the 50-day. This could be a good setup along with the other chip stocks. So we will keep this one in mind. Along with Lowe's and Home Depot, the home improvement stocks should continue this trend as hurricane season picks up, while we also look for Microsoft to finally break out of this consolidation pattern. Nice trend into consolidation the last week of June, the whole month of July and August. Looking for a breakout, while RSI remains above 50 and price action just below a volume by price breakout to all-time and 52-week highs, which means there's no supply overhead. If we get into that zone, look for a pretty big move and for volume to confirm MACD's turned up and crossing. Netflix looking for this bullish trend to continue, hold above the 50-day and follow through. With Nvidia breaking out, we're also looking for this one to lead, AMD to follow, along with Intel, LRCX, Taiwan Semiconductor, among others. Volume increasing and following through this week. We're also looking for the payment processors to continue higher, like Square, MasterCard, and Visa, among others. Also looking for PKI, Perkin-Elmer, to hold the 21-day and follow through. This could be a good entry. Volume started to pick up on Friday, right at the 21-day moving average, with overhead resistance at this volume by price band. If we move above this 120 zone, 122.50, this should continue higher, as it has in the past when it pulled back to the 21-day before and the 50-day previously in June, with buyers most recently in the middle of July making themselves known. Those are institutions and not day traders looking for a quick buck. ServiceNow looking for a breakout above this pivot zone and 52-week highs, RSIs above 50. Stamps.com holding the 21-day, looking for that to break out as well, RSIs above 50. We'd be interested on a bullish day Monday and a follow through on Tuesday for a potential swing back up to the highs. While Thermo Fisher shows signs of a continuation of this breakout that we saw on Friday, RSI is rising, volume showing institutions are the ones that are doing the buying, and MACD's turning, stochastics a bit overbought at the present time. Maybe a little weakness first thing in the morning on Monday, Tuesday. RVOL picks up, shows that the stock is in play, and then we see a bounce, ABCD pattern for potential confirmation. Tractor Supply, no reason to believe that this won't continue higher. Nice trend, Very clean looking chart. Last time it pulled back to the 21-day back in June. We saw the same thing happen in August. Now we're just riding the 9 EMA, RSI staying above 50, and we had volume coming in on Friday showing institutions are still picking up shares as this pushes higher. Virtu Financial, looking for this to continue higher as well, as RSI remains above 50 and volume shows that institutions are the ones that are picking up shares, as price action moves back above all of the moving averages and volume by price support. West Pharmaceutical, along with Merck, Johnson & Johnson, and Pfizer, we're looking for Bristol Myers to also follow the trend. Bullish consolidation, looking for a breakout in the short term, and would love it even more if all of these move together as a unit. Workday, nice little consolidation, shallow little cup, small handle starting to break, looking for a breakout. Volume by price support just below, RSI is above 50. Looking for more volume to give us an indication that institutions are picking up shares. Watch Workday in the short term. Zoom Video proving once again this stock is impossible to short. Broke out last week on Thursday, followed through on Friday. A little bit of selling at the highs with the potential for a pullback to breakout zone right around this 281 this week. That would be a good entry if we saw buyers step up as RSI remains above 50 and MACD is above its signal line. Volume showing that institutions did pick up shares last week. As in previous weeks, we also want to pay attention to those stocks showing relative strength on the MarketSmith. Relative strength, stocks moving higher when the markets are pulling back a bit. These look really good. Apple, Best Buy, Big Lots, BJ's Wholesale, DHI, Generac Holdings, JD.com, Lennar, and Lowe's companies, to name a few. These all look pretty strong going into week. So make sure you check out the stocks in the opening monologue. All of these were screened for the same reasons. Relative strength stocks, stocks showing above average volume, and stocks on the blue dot scan going into this week. Here's the 100% volume scan. Already went through these. Check them out. Pause the video and look for some of these stocks to continue higher. Here's the blue dot scan. I look for the stocks that are just breaking out as of Thursday and Friday as potential trades. Also check out the stocks from the Dow Industrials that are on the opening monologue. Caterpillar, Home Depot, Intel, Johnson & Johnson, 3M, Merck, Nike, Pfizer, Procter & Gamble, United Health, Verizon, and Walmart, all of them showing potential at the 21-day moving average after a pullback in RSI above 50, like we see here on Caterpillar, Disney, Home Depot, and Lowe's alike. Johnson & Johnson following through. As we previously mentioned with the pharmaceutical stocks, we'd like to see all of them moving together. Watching for industrials like 3M to push higher as well off the 21-day. Here's Merck, looking for follow-through, RSI at 70. MACD above its signal line. Nike from a previously mentioned watch list, looking for follow-through as it continues to press 52-week highs. Pfizer looking for a breakout, nice cup and handle pattern. Procter & Gamble following through. And United Health looking for healthcare to continue higher this week as well. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. It is August 23rd, 2020. Look for a watch list later tonight around 11:30, 12 o'clock lately on the East Coast, 8:30, 9 o'clock on the West Coast. Look for that in your inbox. Otherwise, I hope this helps. Get outside and enjoy the rest of your day. Take care, and I'll talk to you soon. Take care. Ciao.